I understand that along with the capital, they also need one or many items from the following list: governance, long-term planning, a new capital structure, commercial leads, or new channels of sales, even operational support. So they need much more than only capital. And for us at DGF, that we are focused on growth capital, we always invest in EBITDA positive companies. And in a company that is EBITDA positive, it's really difficult to sell only capital. You have to sell something more in order to the entrepreneur to allow you to become a shareholder. I think two things regarding this question, David. One, entrepreneurs learned about somehow bad experience by 2007, 2008, when many companies went public without being prepared to do so. So this is first part of your question. Not only the Bovespa Mais, but the need or the challenge to become a listed company. So entrepreneurs are really considering doing two very good samples. We have always talked about TOTUS, a Brazilian IT company that is listed, that was formed by 3-4 companies, all VC backed. So the entrepreneur has this idea of following the same strategy. So I think the Bovespa Mais is also helping with the issue. In 12 years time, many things are different. I can highlight that today we don't need as a firm to sell to the entrepreneur the concept of venture capital, of private equity. They pretty much know what we are talking about. But today, I think the Brazilian as an institution, we have many good items or strength that turns the entrepreneur into a potential candidate to receive this kind of capital. And again, we don't need to explain, we just need to convince the entrepreneur to allow us to invest. As I mentioned, many of them, they have a very good situation in terms of returns. They are EBITDA positive as we focus on this growth market, and they benefit from the help of many items as I just pointed to you. Today, it's really different in terms of potential. With the low inflation, although we are facing today a kind of a little bit higher than forecasted inflation, but I do think that the entrepreneurs are much better prepared to entertain a growth within the country. The country is showing a very good opportunity. Today, Brazil has around more than 4 million companies. And if you do 2 drill downs, you're going to find a very compelling number. One item is number of companies growing above 10% in sales. And another item is a company growing in number of employees above 20% a year for the last 3 years. If you combine these two items, you're gonna find some 30,000 companies. So the Brazilian lower middle market, as we rank, it's a fantastic market, and we can for sure find very good opportunity, as we did on our fund number 2. On our fund number 2, today we are currently running at IRR of 40%, and we are fundraising, we are close to the final fundraising for our fund number 3, targeting $200 million. And we believe strongly that we are going to deploy this kind of capital without paying much higher valuation than we did in the fund number 2, and we are going to have the same chance to deliver the same result. Why is that? Because we are very focused on investment process, very disciplined investment process, and we don't diversify. We don't do anything else but private equity. We don't do M&A, we don't do consulting, we don't do money market fund. So this is the focus. And today, 12 years after founding DGF, this strategy is paying off.